Hey guys, Candlestick here, and today I want to share with you a breakdown from one of the charts that we analyzed in our live trading room this week. Now, the reason I picked this specific example is because it really has a little bit of everything packed in one. I'm talking inside bars, combining both swing trading and day trading analysis, even going down to those range bar charts that you guys love seeing to give us a completely different perspective on price action and look for hidden opportunities. Speaking of hidden, we're going to talk about hidden divergence and how that helps us with trend continuation opportunities. We're going to talk about mapping out potential reversal zones, and of course, the powerful yet sometimes very subtle clues that candlesticks can leave if you know how to read them correctly. So if you're someone that wants to start putting the different pieces of this trading puzzle together instead of just looking at isolated signals, this breakdown is something you certainly want to see. And hey, if you ever want to join us in the live room, it is part of our risk-free trial membership. Just head over to www.tier1trading.com and come join us. Here was one from the weekend, another one from weekend. This is similar to what we just spoke about on dollar yen. This was the dollar Canada. So one, we had the bat pattern forming. But then we spoke about, remember, if we can break out of this range, then we're likely to travel to that bat pattern completion point. And then you can do a little stop and reverse action there if you choose. Now, we did end up getting that retracement, although on a very lower time frame, right? You can see that on the hourly, we came down here. If you wanted to get involved, you'd probably have to be down on the 15, right? There's our break and close above, right up here. Here's our pullback. And then your guess is as good as mine on how you would have gotten involved. There's one way that I see you could have gotten involved here. Can anyone see what that way is? There's no 3-bar reversal. There's no higher high, higher close, but there is something here. Yeah, an inside bar breakout. So this is called an inside bar. This would not be a double bottom for me because of the depth of the retracement. But if you don't have that rule, then yes, this could be a double bottom as well. But the fact that we retrace all the way back up the previous structure and past 382 would eliminate this from being a double bottom. But that's a personal rule that I have. If you don't have that rule, you're perfectly fine. So this is an inside bar, not this, but this, right? Because this bar completes, completely within the range of the previous bar, which this is a pretty easy one because this bar has a pretty big range on it. Right? With inside bar breaks, there's a few ways to trade them, but typically what you're doing is if you were looking to sell, you would put a sell stop right below. If you're looking to buy, you would put a buy stop right above. If you were putting that buy stop right above, and this is an aggressive technique, right? You would be filled on the next bar. So that probably would have been the only way I see you could have gotten in because there's no higher high, higher close unless you're waiting for this double bottom down here. Now, this is a good example as well as of how a range bar chart would break this up. So my ATR is 7. So I'm going to go down to an 8 range bar chart and see if this provides me a different story, right? Because this is what we were looking for, right? Higher high, higher close, pullback. Where does our pullback come to? Into our previous level of structure. Let's look at the RSI. Does the RSI do anything for us? That would add clues to this. And we can still look for a fresh break again. That's going to be the next scenario, but let's just walk through this initial scenario. RSI is oversold. All right, so we have that going for us. Real quick, I just want to throw in a Bollinger Band because we spoke about it yesterday. Nope, this would actually be the opposite signal right here. So we're not going to do anything with our Bollinger Bands unless you're using the counter trend Bollinger Band there. Ollie says hidden divergence as well. My eyes didn't even see that, but again, I can't really see today. Everything is blurry. Yeah, look at that. Lots of hidden divergence, even from our not just our previous low here, but even this low down here. And again, hidden divergence is we have a series of higher lows on our chart of price, our indicator oscillator. We look at these same areas, lower lows. Right? So good sign of hidden divergence is a sign that trend continuation traders would look for. But let's go down to a range bar chart and see if there was an alternative opportunity to get involved in here. Because as we go down to the range bar chart, I can guarantee that this candle is going to be broken up, right? This candle has a range of 26 pips. So if I go down to an 8 range bar chart, that's going to be at least 3 bars. So let's do it. Let's look at the range bar chart and see what we have. We'll go to an 8 range, which will represent, what, the 15-minute chart? Is that what we're on? Yep. And see what that looks like. All right. Ha 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 ha. What do we have here? Oh, we're going to have our own little problem, though. Darn it. All right, well, this kind of sucks, but this is trading for you. So we go back to the original idea, right? First thing we needed was a break and close above. Did we get that? No, damn it, right? So we traded in one problem for another problem, right? As I mentioned, it broke up our bar. So this was our big retracement right here, right? This was that move right here, where we had no entry reason aside from maybe a higher high, higher close, or from an inside bar breakout, excuse me. We go down here, what do we have? We got a beautiful 3-bar reversal, higher high, higher close, right? Beautiful entry reason right there. However, we also never had the break and close above, which we know that this is what jumpstarts everything. The break and close above allows us to make the bullish prediction. The bullish prediction allows us to look for the pullback. The pullback allows us to look for the reason for entry. So I tried. We traded in one problem for another. We still have that opportunity, right? This is still the range that we can look to trade. The bullish trade is still intact until we get to 138.75s. So even if you weren't able to get involved in this initial move, right? What should we now do? Or what can we now do? Should, can, both. What do you guys think? Again, this is the range of what we're looking to trade based on that higher time frame. Should we rip up our computer screen and throw it away? No, just wait for a fresh break, right? So if this being the new high, once we break that new high, if we violate that new high, I should say, then it resets the whole thing. So if we violate the new high, then we can predict a continuation higher. Then we can look for another pullback. And if we don't get opportunity there, then guess what we do? We wait for the fresh break of the next one. And we just keep waiting for that until we've run out of room. So just because you didn't get involved in the first opportunity doesn't mean you need to throw away the entire trade. Just wait to see if the market gives us a fresh break and another opportunity. And sometimes the market is grand and it gives us multiple opportunities to get involved. Sometimes the market is poo and it gives us nothing. But we can't control that. All we can control is how we handle the situation. So keep an eye on that with dollar Canada for the future. All right, we got our pullback on Canada. Oh, Canada, right? Coming back into our previous kill zone. Again, if we're measuring out our previous swing high and our previous outside return before our current extension, we know that our kill zone is the area between our most recent new structure high and our outside return right here. So this is the area in which we are looking for our trading opportunity. Now, depending on what type of trader you are, will depend on how shallow or how deep the retracement needs to come to. That's also going to depend on your target. And what I mean by that is this. If you are a continuation trader, right? So you're looking for a move, and forgive me, I forgot where our magical bat pattern mark was at. If you were to enter right here, you can easily get a great risk reward, right? Even if you had stops underneath your outside return, even if you had stops under the previous outside return, easily get a good risk reward. However, if you are not a continuation trader, remember, continuation traders look for the continuation of the trend, the extension. If your first targets are only a retest of the highs, this is how I personally trade because I'm not a continuation trader. Is this going to work for me? Nope. So I need to wait for a deeper retracement, right, into a zone that actually gives me a 1-to-1 or close risk reward, right? So depending on what type of trader you are is going to impact where where in this area you can take the trade. And an easy way to do it is just like take a Fibonacci retracement from your target to your stop loss and look for that 50% level. So what we're doing in here is going to lower, or this time frame or the lower time frames, we'll look at both, is we're waiting for price action to come down, and then we're looking for the rest of our context clues that we need to take the trade, right? So that could be hidden divergence, which looks like we are probably already going to get. It could be your RSI going oversold. I always get confused with bought oversold. It could be your RSI going oversold, right? It could be needing both of those things and then looking for a higher high, higher close candle, an inside bar. You could put moving averages in there. We've been speaking about Bollinger Bands and Keltner channels all week, right? We could put a Bollinger Band in. You can say, hey, we need to either do our Bollinger Band strategy where we retest the midline, right? Remember our higher high, higher close strategy up the midline, or maybe we wait for it to go all the way across to the extreme of the other line, right? There's endless ways you can attack it, but as Jackson is still screaming in your ear, the only way that matters is the one that is in your trading plan. But the cool thing about trading, and I specifically want to talk about this because so many of you guys are new from the workshop, is that you don't have to trade one way. There's not one specific way that you need to trade to be profitable. There are so many tactics that you can take, and this is what we mean by you want to make trading your own. What are the things that you like? Do you like Bollinger Bands? If yes, you can use them. If not, boom, erase them. Do you prefer a moving average? Do you like a MACD? Do you want to use a stochastics instead of an RSI? You can use any of these things, right? We're getting what we wanted on Dollar Canada. Still got to wait. This is an hourly chart. This is what I can personally trade on the hourly. So we're at least 3 hours away before I can do anything here. We need to push a little bit lower. But if you're a day trader, we can push. We can go down to the lower time frame. Again, you may get a quicker reason. We can see our EMAs crossing already. We can go down to a range bar chart. Let's go down to an 8 range. You guys know I love me some 8 ranges, right? We're going down to structure right now already. We're getting some clues from candles, rejection clues, right? Bullish rejection. If this closes, we have 6 minutes. Bullish rejection. You get a higher high, higher close after that. That's a very good sign. So I just want to sneak back in real quick before I head out for today and update you on the Dollar Canada idea that we took a look at. Remember, we were looking for our rejection candle. We were looking for confirmation of that with our higher high, higher close. We got that right here, both on the 15-minute chart. We also got that on the range bar chart as well, if you remember us watching that. And then the market went up and extended. So a good example of just really simple price action based trading. There's no need, although you can use them, there is no need for fancy indicators. It's just essentially the idea and the knowledge of knowing the 3 basic ways to trade, knowing how to read and interpret the clues that candlesticks give us, and then actually having the guts and the discipline to get involved and stay involved. So I hope you guys enjoyed the vid. Tier 1 members, if you're watching, hats off to all of you guys that took this trade. I know a few of you guys were waiting for this same type of deal. Well done, assuming you followed your rules. And until next time, plan your trade, trade your plan, hit that like button, subscribe, and leave a comment if there's anything else you guys want me to take a look at.